Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Most people understand the process of getting what we call in the reverse mortgage world a forward mortgage. That's a conventional, normal mortgage. And most of the time, people nowadays, they go online to shop rates based on their credit score. You know, the higher the credit, the better the interest rate. They shop around, try to get the lowest closing costs, and then they'll fill out an application, a lot of times online, without talking to anybody, most of the time as well, too. They provide, they upload their information like income documents and bank statements, things of that nature. They can all do all that on the computer. They lock the rate and they close the loan. Boom. They get a conventional mortgage. A lot of times they don't have to even talk to a person, or they certainly don't go meet with a person. Well, reverse mortgages are a little different, and that's what we're going to talk about today because you are listening to Reverse Mortgage Radio, and I'm very glad you're here. We're going to talk about the process of getting a reverse mortgage. That's what we're talking about this week. You can reach me if you have any questions at all about reverse mortgages. Give me a call. My name is Bruce Simmons. You can talk to me. And I meet with you. I attend the closings. I follow up with you afterwards. We get to know each other, okay? But my name is Bruce Simmons. I'm the reverse mortgage manager with American Liberty Mortgage in Denver. You can reach me directly at 303-46. Actually, you know what? I forgot that number. I'm switching that over. That used to be a landline that rang right into the office, into my office in my house, and then I'd forward it to my cell phone. But I just this week switched it over to a cell number. It's the same number, but it's going to be down for a few days, and I'm not sure when it's going to be back. They said it could be anywhere from 2 to 10 days, and I just did this on on Thursday of this last week. So. It's still down for now. But let me give you my cell phone number. My direct cell phone number is 303-513-2748. 303-513-2748. You can text me at that number. You can call me, whatever. I used to be kind of concerned about giving that out on the radio, but it's all over the internet too. It's pretty much everywhere. It's on my business cards and my LinkedIn page, all that stuff. So no secrets with me. Anyways, give me a call or just visit me online as well. My website is reversemortgageradio.net. reversemortgageradio.net. You can go on there and download my free consumer guide. You can get a quote, and I'm not going to shop you around for, you're not going to get a bunch of phone calls if you just fill out the information on my site. I'll call you, but that'll be it. So that's kind of how you reach me. And I kind of wanted to get into the details of what it takes to apply for a reverse mortgage. It's not that difficult, really. But there's some differences between a conventional mortgage and a reverse mortgage. Before we can go there, though, I do need to make sure you understand what I'm talking about when I say reverse mortgages. Because a reverse mortgage most often is an FHA-insured loan. It doesn't always have to be that way, but probably 95% of the time, it's an FHA-insured loan, and it's specifically designed for people that are 62 and over. It allows you to convert a portion of the value of your home into money that you can spend. You're converting an illiquid asset, your home, into money that you can actually spend, liquid money that's not liquid, but money that you can actually spend. Because if you go to the grocery store and say, hey, I've got $400,000 in equity in my house, they're going to look at you like, so? Well, can I get my medicine? No, I need money. You got to have money. So it doesn't matter what what assets you have. You have to convert it to cash. And that's what a reverse mortgage allows you to do with the equity in your home. It's most people's biggest asset is their home equity. And a lot of it is tied up in your home, obviously. You need to find a way to convert it. You could refinance and get a whole bunch of cash if you wanted to. You could also get a HELOC, a regular traditional home equity line of credit. But those both have payments required. One of the main benefit with reverse mortgages are that no monthly payment is required. We're not going to obligate you to making a monthly payment. You can make payments if you choose to, and there are some people that do that, but you're not required to. So that's what gets me about reverse mortgages. Sometimes people say, oh, reverse mortgages, those are really risky. Well, what's more risky? Being on the hook for a $1,500 mortgage payment every month, and if you don't pay it, you're going to be in threat of foreclosure, or not being obligated to pay that payment. I would say the second one. Not having to make that payment is not nearly as risky, especially if you're living on a tight budget. But it's not just for people living on a tight budget either. This could be used as a financial planning tool, and we're going to talk about that a little bit. But in a nutshell, it allows you to convert part of the value of your home into money that you can spend. As long as you live there, you or your spouse live in the home, and you pay your property taxes, you pay your homeowners insurance, you maintain the home, and keep your name on title. Those 5 things, as long as you do those, you are never required to make a payment on this loan, and you can never be forced out of the house. It doesn't matter what happens to the value of your home or the loan balance, because the way it works is you're still charged interest every month on this loan. Remember, it is a loan. It's not free money. You're not selling your house to the bank either. It's still your house. You can pay it off anytime you want. There is no prepayment penalty. You can paint it purple. It's your house. You just have to pay the taxes and insurance, live there as your primary residence, maintain it, and keep your name on title. And it's your house. Since you're charged interest every month, because it is a loan, but you're not paying it, well, what happens to that interest? The interest you're charged gets added to the loan balance. It's what's called negative amortization. Okay? What my grandpa would call one of those silver dollar words. But basically, your loan balance is going to grow over time. And it compounds too, because a year from now, you now owe $10,000 more than you did when you started, let's say. So now you're being charged interest on that on more than just the money you borrowed, also the $10,000 of interest that you were charged. That's a key process that you have to understand with reverse mortgages. That's how it works. That's the goal of it. That's why I always tell everybody, you're going to get a statement every month about your reverse mortgage. You're going to see that loan balance getting bigger and bigger and bigger unless you pay the interest every month. If you don't do that, it is going to get bigger. If looking at that statement and seeing it get bigger and bigger every month is going to cause you more stress than the benefits you get from the reverse mortgage, don't do it. But you got to remember, though, because there's 2 sides of the equation, right? You're losing, your loan balance is going up. You're not necessarily losing equity, though, because you got to remember, odds are, in the long run anyway, the value of your home is probably going to go up. It may not be going up right now. It may be going down a little bit right now, actually. But next year, 2 years from now, it's going to be going up again, 3, 4, 5% per year. Whereas you're going to be charged interest on the reverse mortgage too. So you're not necessarily losing equity. It just depends on what happens with appreciation. But you are owing more on the house than you would have if you didn't have a reverse mortgage. However, remember, you're keeping that principal and interest portion of the loan payment that you would have paid every month in your pocket. If your mortgage payment is $1,500 now and $500 goes to taxes and insurance, that's still your responsibility. But the $1,000 in principal and interest that you're not paying, you're keeping in your pocket. You can invest it. You can save it. You can pay off other bills with it. You can give it to your kids. You can help pay college for your grandkids, whatever it may be. Travel. Don't forget that. There's a cost to everything. And that's the cost of the reverse mortgage, is you're not going to have as much equity when you leave the home as you do now, because the loan balance is getting larger. Okay, enough of that. Let's talk now about the process of reverse mortgages. Really, I look at it like a 7-step process. Number one is awareness. A lot of people don't have a clue about reverse mortgages. Even with the ads on TV with from Magnum PI and everybody, even with all the junk mail you get of people trying to get you to do a reverse mortgage, and you say, that's a scam. It's not a scam. It's an FHA insured loan. Remember, it's insured by the government. It's regulated by the Consumer Finance Protection Bureau and HUD. HUD sets up all the rules. So we have to follow all these rules. They're the ones that determine how much you can borrow. Basically, HUD dictates to us, the lender, how much we're allowed to loan you. It's based on the age of the youngest homeowner. The younger you are, the less money we can loan as a percentage of the value of your home. The older you are, the more money we can loan. It's also based on the value of your home and the interest rate. The lower the interest rate is, the more money we can loan you. Back in 2020, we were loaning a lot more money than we are today, because in 2020, 2021, rates were at 2 and 3%. Now they're in the 6s. So you got to keep that in mind, that we don't loan 60 or 70%. In order to get 50% of the value of your home on a reverse mortgage, you need to be in your mid-80s. Somebody who's in their mid-60s is going to get in the low 30% range, 33, 34, 35% of the value. So remember that. And you have to pay off any existing mortgage that's already on your home. So like I said, if you've got this $1,500 mortgage payment, and let's just say we can loan you $200,000 on a reverse mortgage, and you owe $150,000 on your current loan, we have to take the first $150,000 out of that $200,000 that we can make available to you to pay off the existing mortgage on your home. A lot of people call me, they say, hey, I've got all this equity in my home. I've got $400,000 in equity. Well, okay, what's your house worth? $1 million. Well, that means you owe 60% on the value of the home. If you owe $600,000 on $1 million home, that means you owe 60%. I can't help you right now with a reverse mortgage, unless you're like 95. If you're over 90, then I think we can get over 60% if you're in your 90s. But you're probably not calling me if, at that late stage. I have done loans for people in their 90s. I did one for a lady 99, some others in their 96, 93. Most people get the reverse mortgage in their late 60s and early 70s. I've done a number of loans for people who start the process before they're even 62, and they get it right when they're 62, because we can't close the loan until they're 62. So it just depends on where you're at in life and how you look at the equity in your home. If you look at it as an asset to be used or an asset to be saved, and that's a key thing. Okay, so the first one is awareness. You got to find out, what is this thing? The problem is too many people think they understand what a reverse mortgage is, and they don't really know. I remember when I first started in 2002, a customer called me. I was a mortgage broker at the time, and he said, do you know anything about this reverse mortgage business? I'm getting these letters, and I'm thinking about it. I said, boy, I don't know. I think you have to give your house to the bank or deed the house to the bank, and you better get an attorney and all this stuff. I had no clue what I was talking about. What the heck? But yet, I was the professional. I had to say something, right? And that's the thing is, too, I have people that came back to bite me later, a couple years later. I remember a lady said, well, I want to talk to my attorney about this. I said, no, let me talk to your attorney, or can we all meet together? She said, no, I'll just talk to him. And sure enough, I called back a week later. She says, yeah, I did talk to my attorney, and he says it's a bad idea. Oh, by the way, he did have a question. Who owns the home with a reverse mortgage? And as I slapped my hand on my head, and oh my gosh, he didn't know what the heck he was talking about. And he's giving her advice saying it's a bad deal. Don't do it. but he didn't have any clue what it was about because you still own your home with a reverse mortgage. That's like the first level of knowledge that people get when you're starting to learn about reverse mortgages. You keep the home. It's in your name. That's why you're paying the taxes and insurance. That's why you can sell it at any time, and you keep whatever equity is left in the house. All right, so you realize, let me check out this reverse mortgage thing. It might be beneficial for me. So you take action and you learn more. This is the second step. When you're shopping around for reverse mortgages, I don't care if it's online or on the phone, never, ever, ever give out your social security number. If you're looking for a quote for a reverse mortgage, anybody you talk to can get you a quote on a reverse mortgage without pulling your credit, without getting your social security number. Big companies sometimes want to get your social security number. They try to trick you into filling out an application. I've talked to customers, they said, all I wanted was a quote from people, and I got a big fat package in the mail of 150 pages. And they're like, I'm not signing that stuff. I almost said a bad word there, but that's what they say. And I'm like, no kidding, I wouldn't either. They're just trying to swindle you into signing something that you don't understand. That's where working with somebody local is really beneficial. Where you could just sit down with me or whoever and get the information, but don't give your social security number out. Okay. You can go to my site. Again, it's reversemortgageradio.net, reversemortgageradio.net. You can get a good ballpark by amount of figuring out about how much you can get just by filling out a form on my website in the upper right-hand corner. I think it says get a quote or something like that. Download my consumer guide to get more information, and then call me. I'd love to talk with you about your specific situation. That's the thing. Reverse mortgages are so customizable. We can customize it so many ways. You can receive a monthly payment. That's some people say, well, reverse mortgage is where the bank pays you instead of you paying the bank. That's where that comes from, because we can make monthly payments to you. We deposit that money every month in your bank account. We can also give you a big lump sum to pay off your existing mortgage or get some other money. There are restrictions, like if you own your home free and clear, we can't give you 100% of all the money in one lump sum. There's just restrictions. We'll talk about that if you call me. You can also set up a line of credit. That is so beneficial, having a line of credit available to you for emergencies or travel or investments, all different kinds of things that you can do with that line of credit. Just allow it to grow, and then let it be your kind of a long-term care plan when you're 15 or 20 years down the road, or a combination of everything. A lot of people do some kind of combination. They'll take a lump sum to pay off a mortgage, and then they'll leave the rest in a line of credit. Or they'll take a lump sum to pay off a mortgage and then maybe a little more to pay off some bills and leave the rest in a line of credit. Or they receive monthly payments and leave a $20,000 in a line of credit for emergencies. It's very flexible. Give me a call with that. All right. So don't give out your Social Security number. Check out my website. You can also go to the National Reverse Mortgage Lenders Association website. That's got a lot of great information. It's at reversemortgage.org. Reverse mortgage, not plural. It's just mortgage.org. That's the reverse mortgage website. Okay. So you can get the basics, and you're gathering information at that point. All you have to give out is your name, your address. Like when you ask for a quote, somebody asks you these things, you need to give out your name and address. Because like with me, I like to make sure you tell me your home's worth $700,000. I always do a little check with my title company where I can see other comparable sales. I might ask you some details about your home. If you have a finished basement, or is it a walkout basement, or whatever the case may be. Have you done any updates recently? Things of that nature. That way I know if I see a property that sold for $790 in your neighborhood that's been completely remodeled, you're probably not going to be there if you haven't done any updates recently. Whereas if there's another one for $620 in your neighborhood, same style of home and everything, similar square footage, that probably is one that needs a lot of work, and your home would fall somewhere in between. Also, too, give out I'll need what your estimate of the value is and how much you owe on it. Again, your dates of birth, yours and your spouse's dates of birth, and your email address typically. I don't necessarily have to have that, but it depends on what you want to give me. A lot of times I'll run the numbers and then we'll schedule a time to meet. So unfortunately, I know if I can only loan you 35% and you owe 50% on the value, that I'm not going to be able to help you. I typically will just tell you that right there. I'll say, you know what? FHA doesn't allow us to loan 50% to somebody that's 63 years old, and all we can loan is about 30-some%, and we can't loan you enough to pay off your existing mortgage, and that's a requirement. Now, that doesn't necessarily rule you out, because you could bring cash to closing. So you say, well, that's right, I just inherited $200,000 from my grandfather, and I can pay the other $80,000 and I'm going to be short. So in other words, if you owe $150 on your, or let's say you owe $200,000 on your reverse mortgage and I can only loan you $120, well, you're making up the difference because we have to pay off that loan at closing. So we loan you $120 and you bring $80 to closing yourself, then we pay off that loan. So you no longer have that mortgage payment and you just have the reverse mortgage. Okay. And if you have questions about that, I'd be happy to go into detail. Then once you decide that this makes sense, I think this might work for me. You're still not, maybe you're not 100%, but you're 90% sure you want to do it. Then you have to talk to a reverse mortgage housing counselor. That's now it's not because this is a bad program. I had somebody say, if I have to talk to a counselor, that must mean that this is a really risky thing. No, it's not. Okay. And some people are, well, the government doesn't need to know what I'm doing. It's an FHA or FHA approved third party is what it is. And it's a requirement. If you don't want anyone to know you're doing this at all, ever, and you don't want to do the counseling, you're not going to get a reverse mortgage. Okay. It's just that cut and dry. So, and that's even true with the non-FHA. You have to talk to a reverse mortgage counselor. Once you do that, you say you talk to the counselor, and the counselor tells you basically the same thing I'm telling you. Okay, this is how much you can get. This is what the interest rates are, and this is how it works. We want to make sure you understand it. Want to make sure you understand your requirements as well, that you have to live in the home as your primary residence. You have to pay your taxes and insurance, maintain the home, and keep your name on title. So we want to make sure you understand that. And now sometimes some counselors will talk to you about maybe it's better to sell. If you're living in a 3-story home on 3/4 of an acre and you've got bad knees and you're 74 years old, maybe it's a good idea to liquidate that equity and use a reverse mortgage to buy a new home. And I've done whole shows on how that works in the past. Go to my website at reversemortgageradio.net, and you can see a quick summary of every radio show I've done. And I think this year I've done a show on purchasing. I think it was like May or June, probably May. I usually do it in the spring because that's when people start thinking about houses, on how to use a reverse mortgage to buy a home. All right, then what you do is you get something called a counseling certificate. A certificate of counseling. The counselor can email it to you. They can email it to me. Sometimes they just mail it to you. But if you want to move quicker, tell them you want it emailed. And then once you have that counseling certificate, then we can take the application. And we can do e-docs now too, where basically I send you an email with all the documents. It saves your hand a lot of hassle. I mean, especially if you've got arthritis or something, or Parkinson's, something like that, where it's really hard to sign a lot of documents. The e-docs is a blessing, but you need to still understand how it works. So one thing I like to do when I can, not always, but sometimes if I send out e-docs to you, I like to meet with you and we can go through the documents as you pull it up on your computer, but then all you have to do is push a button to sign instead of actually physically signing. And I'd be happy to do that with you. Or you could just go through it on your own and boom, 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 you click, 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 and you sign away. But I still want to always make sure that you understand what you're signing. Okay? So that's the application. Once we filled out the application, that's when I take over, me and my processor, and we process your file. That includes getting an FHA case number. That's the first thing we have to do. And that just identifies to FHA that, yes, your house, you and your house are getting a loan on your house. Then we order the appraisal, we order title work. My processor has to verify that there's no other liens on the title other than what you've told us. And also, too, she has to verify your homeowners insurance payment history. If you have an HOA, we have to get a 2-year payment history on your homeowners association. And then I deal with that because they change management companies all the time. And some of these places have 2 and even 3 HOAs. I'm like banging my head. Oh my gosh, you got to be kidding me. But we have to verify 2 years of all those. And if they've changed management companies 3 times in the last 2 years, that can be a challenge. We also have to verify your property taxes have been paid on time. Now, a lot of times taxes and insurance are just part of your escrow. And in that case, if you can provide an escrow disclosure to me, that speeds up the process for us. That helps my processor a lot. She's very grateful for that. And then we also have to make sure you qualify income-wise, which I typically do in the information stage. I'll ask you what your income is and if you have any debt, things of that nature. And then once we get the appraisal in, then I redisclose to you because let's say you say it's worth $700 and it comes in at $720 or $680. Then I have to redisclose the numbers to you because they change a little bit. The only cost that changes is the initial mortgage insurance premium because that's based on the value of your home. And that's a 2% of the value of your home. That's what goes to FHA. So if you have you were saying you have a $700,000 home and 2% of that is actually $14,000. Now that's not out of your pocket, but that is an upfront cost. But then your house comes in at $725,000. Now that fee has gone up from $14,000 to $14,500. So you've got to be aware of that. And so I have to redisclose to you, but on the good side, you have more money available to you. That's always the blessing part. A little bit higher cost, but more money. The other costs, origination fees, and usually the title insurance doesn't go up. Depends if it crosses a threshold, okay? And that changes on... Anyways, we're not going to get that deep into it, all right? So we're processing the loan. We have to do the financial assessment, basically making sure you qualify income and credit-wise. Then we send everything into the underwriter. The underwriter then sends back to us an initial disclosure with typically half a dozen other conditions. So it's an initial approval. Maybe we need a letter of explanation about an inquiry you had a month ago for a new car, but you didn't get the new car, so we have to write a letter of explanation. Or there's an address that shows up on your credit that we didn't know about, things like that. Then once we get that closed, we close your loan. But even then, we're not totally done because you've got 3 days to review all the documents before any money is released. That's called the 3-day right of rescission. All right, that's basically how it works. And then once after that, the whole process takes about a month from signing the application to closing, sometimes quicker. A lot of times it could be less than a month. Sometimes it's a little more. But please feel free to call me with any questions. My number is 303-513, this is my cell, 513-2748. 303-513-2748. My name is Bruce Simmons. I'm the reverse mortgage manager with American Liberty Mortgage here in Denver. Visit me online as well at reversemortgageradio.net. Thank you so much for joining me today. I hope you have a fantastic day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821 or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.